Amit Dixit is now with us. He tracks Tata Steel closely. Amit, what do you think is the reason for this move? Do you think it's purely results, or global metal stocks are also rallying because of which Tata Steel is going up?
Yeah, so I think that it is a combination of two things. One is, of course, the P&L part of it. That results were ahead of consensus estimates, particularly Tata Steel Europe performed quite well. The second and the more important reason is, of course, the focus on deleveraging, and that is what we have highlighted in the note post results. That deleveraging is something that investors were keenly looking on for Tata Steel, and they have manifested it in FY19 and in FY20 also. The target is to reduce debt up to the extent of $1 billion. So, which I think is quite positive. And consider this fact that they are focusing more on domestic business. Southeast Asia is out of the balance sheet now, and it's a matter of time before the restructuring in European division also is complete. So they are focusing more on the resilient domestic operations. So one is the focus on domestic operations, and of course deleveraging. These two Ds I think are driving the stock today.
Amit, how are you reading into their India performance, and given the kind of thrust that they are placing in improving, operational efficiency and deleveraging, how is it likely to shape up in the next couple of quarters?
Yeah, interesting question actually. See, we maintained our EBITDA per ton for the quarter. We estimated it at around 13,400, and it came slightly higher. We were a little bit lower than consensus, but we believe that in Indian operations, particularly for standalone, the EBITDA per ton would continue to remain between 13,500 to 13,600 going ahead, because we really don't expect price support at this time. However, on cost front, particularly with merger of Bhushan, it would be easier for them to realize some of the cost synergies, particularly in the procurement of iron ore. So the sustainable EBITDA of Bhushan could go up. That is point number one. The point number two, of course, is that with Bhushan getting additional approvals from Tata Motors, Ashok Leyland to supply auto parts. So despite auto slowdown, we believe that the company would be able to improve its market share. So these are certain things and certain aspects. And then going ahead, if you take a medium-term scenario, they are going to set up a cold roll mill at KPO2 in the beginning, then followed by a pellet plant. So I think it's a well-founded strategy to control cost and look at their other cost parameters, efficiency parameters such as coke rate, etc. They are the best in class. So I think cost would help them in maintaining their EBITDA or profitability rather than realization.
Right, right, Amit. Thanks so much for taking out time for us. Always good to get perspective.